Hey guys, welcome back to another market update. We're here with the rest of the Patti Martin team. Jennifer Adams, Patti Martin. How you doing today?
Great, thanks.
Well,
How are
thanks.
you?
I'm good. I'm excited. There's a lot to talk about. It's a very interesting market. There's lots going on. Last time we spoke, we were talking about December into January and how there's this huge surge in new inventory and listings are coming online. Are we still seeing this type of activity? Is the market heating up? What are you guys feeling as we get into spring?
This is an exciting time in real estate, and there is a lot to unpack. I think that we have a whole bunch of interesting things. I think the theme for this market update is probably going to be, how is what's happening with these so-called tariffs affecting the market? And then the other part is, when people ask me, hey, what's happening in the real estate market? We actually have three distinct pockets of the market where we can really see where, hey, it's a buyer's market for these certain properties. We also have majority is balanced. And then I think we also have pockets where it's definitely a seller's market. What do you guys think?
Yeah, for sure. You're absolutely right, Jen. Like if you look at detached homes, that's where you'd see a less than balanced market. And you would in the condo market, especially the lower end, 6, 7, 800,000, you're seeing a definite seller's market. So it's interesting. We're still even seeing some multiple offers. It's crazy.
Exactly.
So the Greater Vancouver Board came out and said that residential sales in the region totaled 1,827. It is 11.7% decrease from February last year. And oddly enough, it's actually an 18% increase month over month. So my first question to my panel of experts, are buyers waiting for the Bank of Canada rate cuts, or are they just simply more cautious?
I think they're simply more cautious, Adam. I mean, all of us everywhere in the world right now are somewhat discombobulated by the flipping and flopping that is occurring before our eyes. And so not unlike any other event that somehow throws us off balance. Let's talk about COVID, for instance.
Sure.
There's always this reticence. There's always this pause. There's people are like, what's going to happen? What should we do? And so that's exactly what's happening right now. Certainly some people are still selling, some people are still buying, but there's definite pause and concern about what the future holds. And we feel it. We're all just human. So it takes a little time for people to kind of readjust to the new reality. This may take longer than others. It's hard to say.
Yeah.
But I do think that people will kind of get themselves sorted. And even this, on again, off again scenario that we're seeing I think it will actually start to calm people down, because the reality is there's a lot of talk and very little action.
I'd like to add one thing, though. Let's not forget that real estate is a very needs-based business. Sure, there have been years when we see people, in times when money's cheap and all that, making investments and kind of saying, oh, I'm going to take my money and I'm going to purchase real estate as an investment. So maybe we're in a time where people aren't doing that. But let's not forget, everyone needs a roof over their head. Kids need to move out of the house. People need to take their large property that's no longer serving them and downsize. So regardless of hesitation and tariffs, life goes on, and we're still relatively busy as a result.
Yeah, I agree. And I think that as time wears on, we will see less and less of this having as much of an impact as it seems to right now on our market.
Yeah.
Yes.
Yeah.
So right now we're in the market today. We have more selection. We have interest rates possibly dropping. Do you guys think that there's going to be that typical spring surge where we get into that over 2,000, 2,500 sales a month mark? Do you think we're going to get into the spring season?
Anything's possible. And let's be really clear. There are still many pockets of the market where we are under inventory levels that make it possible for people to have a lot of time to choose and or make good decisions on. Sometimes there's pockets in our market right now where there's two things to show someone and then you're waiting. So we all have buyers like that right now. And certainly there are some areas of the market which seem to have a lot of inventory, but when you break them down and break down the inventory itself, sometimes it's horribly overpriced and will never sell. And so how do we even call that real inventory? We can't. So if we're looking at what's really for sale, Adam, you talked about this before we started. Are we at a level where we have enough inventory? The answer is no. Because if I look at the, I'm going to take Richmond, for example, 435 homes right now for sale. Of those 435 homes, I guarantee I can find 100 to 125 that will never sell because they are so egregiously overpriced. I did an evaluation the other day for someone, and we were talking about product that had been on the market 150 days or more, and there were more than 5 of those examples in my comparative market analysis. That's ridiculous.
Yeah, I couldn't agree more. I think we actually have a case where there are a number of sellers that have they have ideas of 2 or 3 years ago. And unfortunately, the market is not bearing those kinds of prices. Now, what those sellers need to understand is if they plan on buying in this same market, it levels out. So let's say you're selling a little bit lower, you're buying a little bit lower. So, get out of your own way, properly price your product. You're going to sell and you're going to reap that benefit on the buying side. So, it's an interesting thing, but it really comes down to education about what's happening in the market.
We have been so used to a market that increases in value that people have, become absolutely convinced that it's only doing this. And that is impossible. No markets only do this. So, and if you look at even the last year, in the the actual sale price, the sale price was pretty balanced. It stayed the same.
Yes.
And so
very level.
if you bought 2 or 3 years ago, you might have some unrealistic expectations about what it has increased in value. And in fact, it has not. And that would create inventory that wasn't going to sell.
All right, moving on. Right now on the market, there are 5,057 detached, attached apartment properties newly listed for sale in February 2025. Year over year for new listings, this is just under 11%. Month over month, we're actually negative 9% in new inventory. So when we look back to the previous month, we had this massive surge in new listings at 46%. And now we're actually sitting month over month at negative new listings. So just really quickly reflect on the amount of new inventory onto the market. Do you think that huge surge in new inventory was just recycled listings giving a refresh?
Yeah.
Yes.
And
yes,
that's
I do.
exactly what I was going to say.
Yeah.
Okay.
You come into December, listings expire. You come into January and they don't want to be, and people don't want to be for sale, maybe over Christmas or whatever they're doing, holidays of some sort.
Yeah.
And so they come back on the market in January. So yeah, you would expect a much greater increase in that first month of people recycling their properties back onto the market.
I like that we're all in agreement with that one. I think that was an easy one. Here's a little bit of a harder one, guys. Let's tackle it. The total number of properties currently listed for sale in the MLS is 12,744. So it's about a 32% increase compared to last February. It's also 11% increase in inventory month over month. When we're looking at inventory as a whole, most of last year was actually over the 12,000 inventory mark, and we're still sitting at a 5-year high for inventory. So I'm going to go back to one of the comments we made just a little while ago. Is the 12,000 inventory mark a high number of listings for the greater Vancouver, or has it actually just been undersupplied this entire time?
I think it's been undersupplied the entire time.
Yeah, me too.
And then with the increase in inventory being at 5-year high levels, do sellers need to adjust their expectations? And then how do we actually adjust that expectation so that they can remain competitive in this market?
I mean, they have to look at what things have been selling for, because there has been a fair amount of sales, and sellers have to be realistic. The data is there. The information is there. We have, our statistics that we receive every month show that over the last year, the detached homes have maintained the same level of pricing. I mean, it's dipped up and down a tiny bit, but nothing significant. And people have to be okay with that if they need to sell. I mean, it may be that you choose not to sell, but putting your house on the market and having a really unrealistic price is not a good move, because it's a lot of work. It's terribly, disconcerting if you don't get an offer. People get very, unhappy about that. They think something's wrong with their house. Really, it's just the price. It's just price based.
Right.
Everything will sell for a price.
Yeah, I totally agree. And you know what I think's happened is, I think in the past, people have been able to risk putting a high price in a rising market. You suddenly look like a genius. Oh my, you priced this property so high. Well, hey, it was a rising market. You got kind of lucky. The thing is if we're in a balanced market, which the majority of the properties, we kind of think in all the neighborhoods, it's a bit of a balanced market with these other outlying pockets. You're not going to look like a hero by pricing the property high and hoping that the market catches up. Now, can it happen? Sure, if the market rises, but in my opinion, we're not in a rising market.
No, there's no indication that's about to happen.
I agree with you, okay? But here's my kind of argumentative other side of view. I've had sellers talk to me about, listen, you're going to have an interest rate cut in March. You're likely going to have one in April. We don't know what's going to happen with tariffs, but does that also indicate buyers' willingness to borrow money and actually spend money, get into a different style of house? They can afford more. Like, these are some conversations that are just being shot my way. There are comments. I mean, it kind of goes both ways. If buyers can borrow more, are they going to be more likely to purchase? If buyers are also borrowing more, should sellers hold off and maybe get that higher price? Like, I understand market cycles and how things ebb and flow. This is what I'm hearing.
So I totally agree with you. I hear the exact same things from any seller I work with. However, there is too much hesitancy to make what you're saying really come to fruition. If we didn't have all these other factors kind of keeping people from, moving and taking a little bit of risk, but I think people are risk averse right now. I think there's a lot going on. And so if those factors of making that hesitancy aren't there, an unstable political climate, waiting for elections to take place, these kinds of things, then yes, what you're saying, I'm with you 100%. But as these things that increase hesitancy layer on top of one another, those factors are less important.
And Adam, as Jen said last month, we've had 6 decreases in interest rates over the last year.
Yeah.
That should have been enough. And even thinking about what the interest rate is right now, there's some fairly competitive rates out there.
Yeah.
They're not 2%, but nobody ever thinks we're going back to that. Yeah. So I think the rates are pretty good right now. And the risk, as Jen talks about, is that we have inflation again, and they have to curb that inflation with interest rates. That's the risk. So in other words, what if they go up? What happens then?
Yeah.
And it all comes back to what I always say every time. Move when it's right for you. Move when the time is right for you. If you decide you need to downsize or upsize, then move, because you're moving in the same market. Yes. And just be practical and use the information that a qualified realtor gives you to make a good decision, because in any market you can move. Any market.
Absolutely.
That's great advice. Couple more points here. Across all detached, attached apartment property styles, the sales to active listing ratio for February 2025 was 14.8%. The previous month, it was at 14.1%. Heading into the spring, we do have the potential rate cut. We touched on this already. Do you think there's going to be an immediate impact on the market with the next rate cut, potential for another rate cut in April? Do we think it's going to get busier?
I mean, there's no doubt in my mind, we have clients that are preparing to purchase real estate. So we are sending referrals to mortgage brokers. Our phones are ringing. People are asking us what's happening in the market. We've discussed this before on the podcast where, parents are thinking about trying to help their children with, various real estate goals. So yeah, I think people are positioning themselves. But will it be a gigantic surge? I don't really see the factors there for a surge, but I do think we're going to see what I'll call normal market activity, which is more sellers will try to sell and more buyers will try to buy. I do think we'll see a gentle uptick in sales.
And just to your point, I think both of you will agree with me that I can't really think of a buyer who's ever said to me, if the rate just came down another 0.5, I would buy. I don't hear that. I never have. I've heard that, oh my gosh, the rate's coming down as I'm looking. Isn't that great? But it isn't the deciding factor about whether or not I buy. The deciding factor is I need a home. My family situation's changed. I have been transferred. Those are the deciding factors.
Sure. When the economy is kind of pumping, hey, I've received a raise, my wife is or whoever, one of the parents is gone back into the workforce. Yeah. They now have a double income, and there's other factors that kind of add to these things. Yeah.
It's a bonus that the rate comes down, but it's not a deciding factor. I don't believe that.
I agree. I think that's our overall message for this episode, is that you move when the time is right for you and your family.
And we'd be happy to help you.
And we'd be happy to help you.
No doubt.
Yeah.
Wonderful. That's a lot of information for this month's real estate update. Thank you very much, Jen, Patti. It's always a pleasure having you on.
Bye.
Bye.